you missed Nvidia. Be honest. You watched it run, you told yourself it was too expensive, and then it became one of the biggest wealth creation events in history without you. Then it happened again. Palantir. Rocket Lab. You saw the trend early enough, you just didn't act. So here's something happening right now that almost nobody's actually digging into. A few weeks ago, the US government did something it almost never does. It didn't hand out a grant, it didn't just give a speech. It agreed to take ownership stakes in 9 quantum computing companies, around $2 billion. The government is becoming a shareholder in the quantum industry. And this is the same government that took a stake in chip makers last year and is now sitting on massive paper gains.
I made $80 billion for the country in 8 months.
So now they moved into quantum. The headline was pretty much everywhere for about a day, and then everybody moved on. But almost nobody asked the important question: why is the government buying these companies? Why these specific companies? And does it really mean you should buy them too? Because let me tell you something, those two are completely different questions, so let's get into it. First, why is this even happening? Quantum computing isn't just a faster computer. The reason governments care is because a powerful enough quantum computer could eventually break the encryption protecting basically everything. Banks, government secrets, military communication. The entire internet was built around encryption that normal computers cannot realistically break. Quantum changes that assumption. That's why this is no longer just a technology race, it's a national security race. The country that wins quantum could potentially read everyone else's secrets while protecting its own. And China has been treating quantum like a strategic priority for years. The US looked at that and basically decided we cannot come second. So this isn't a stock tip. It's a country trying not to lose a technological arms race. And here's where it gets interesting, because the biggest investments didn't actually go to quantum computer companies. They went to infrastructure. IBM received around $1 billion to build America's first dedicated quantum chip foundry. GlobalFoundries received hundreds of millions for manufacturing capacity, meaning the first priority wasn't picking a winner. It was making sure America could actually build the technology. Then the rest of the money was spread across different approaches. Superconducting, trapped ion, neutral atoms, photonics, because nobody really knows which technology wins. The government basically placed small bets across the entire table. And here's the, I guess you can say, funny part, because the most famous quantum stock, IonQ, wasn't included. Most investors probably immediately think maybe the government knows something that I don't know, but probably not. IonQ already bought its own manufacturing capability and uses a different approach. It simply wasn't what the government was trying to fund. And this is the key lesson. The government's shopping list and an investor's shopping list are not the same thing. The government is buying to win a technological race. You're buying to make money. Very different goals. So now, let's ask the real question here. Should investors buy quantum stocks? And this is where we need to separate technology from valuation. Take IonQ for an example. Revenue is growing extremely fast. The technology is exciting. But the company is valued at around $25 billion while generating roughly $130 million in revenue. That's a price to sales ratio well above 100. For comparison, many high-growth tech companies are considered expensive, around 10 times sales. IonQ is more than 10 times that, and it's still actually losing money. That doesn't mean that the company's bad, it means expectations are incredibly high. And there's a huge difference between this technology will change the world and this stock is a good investment right now. The same applies across the sector. Rigetti, D-Wave, real companies, real technology, but extremely aggressive valuations. So, if you, just like the US government, believe that quantum is real, there are basically 3 approaches here. The first one is the infrastructure approach, and personally, this is the one I find most interesting. Instead of trying to guess which startup wins, own companies that benefit if quantum succeeds, but still survive if it takes longer. IBM is the obvious example here. They received the largest government investment. They are building quantum infrastructure. They actually already operate some of the most advanced quantum systems in the world. But the difference is IBM is already a profitable company. Quantum is the upside, not the entire investment case. Then you have NVIDIA. NVIDIA doesn't build quantum computers, but quantum computers still need classical computing for control, simulations, and of course the error corrections. That's why NVIDIA created CUDA-Q and works with many of the biggest quantum players in the field. And it's basically the classic picks and shovels strategy. Don't guess who finds the gold, sell tools to everyone digging. And then there's Honeywell, a boring industrial company most people don't associate with quantum, but Honeywell owns a large stake in Quantinuum, one of the leading quantum companies. Once again, a real business today, quantum upside tomorrow. The second approach is pure plays. IonQ, Rigetti, D-Wave, maximum upside but also maximum risk. If quantum explodes quickly, these could perform incredibly well, of course, but if the adoption takes much longer than the market anticipates, they could struggle. So size your positions accordingly. Third approach is ETFs, but always check what's inside. Many quantum ETFs actually mostly own like semiconductor, defense, and technology companies. The name on the box and what's inside the box are not always the same, unfortunately. And finally, when does quantum actually become huge? Well, nobody knows. Maybe later this decade, maybe much longer. And that's important because many investors are right about technology, but very wrong about timing. The internet absolutely changed the world forever, but many internet stocks still collapsed. The future can be real and still arrive slower than investors expect. So here's my conclusion. Well, quantum is absolutely a thing. Governments investing billions is one of the strongest signals you can get that the technology actually matters. But important technology and good investments are not automatically the same thing. The government is buying to win a race. Investors are buying to make money. Different goals. For me, the most interesting opportunity isn't necessarily chasing the company already up hundreds of %. It's finding companies that can survive the waiting period. Because in investing, being right is not enough. You also have to survive long enough for your thesis to actually play out. That's it for now. I'll see you in the next one. Ciao!